Hello, traders. FS Collector here. Today is Wednesday, so happy hump day, and it is October 15th. So basically halfway through the month, 31 days in October, so basically halfway through the month. So how's everybody doing today? If anybody has any requests, they have something they would specifically like me to look at, then definitely put it in the chats. Kind of the point of these live streams is to see, to look at stuff for people. So if anybody does have a request, definitely put it in there. It doesn't just have to be forex. I try to keep up with all these pairs on the list, at least on the daily time frame and up. But I will look at basically anything. I'll look at crypto, stock market, indices, basically anything. So yeah, I always like to start off on the US dollar index, and then we'll definitely take a look at gold for you, Allegra. Nice to see you. Thanks for coming. Gold, hopefully you're doing nothing on gold but looking for pullback entries to go long is hopefully what you've been doing on gold for the last like month, hopefully. So anyways, yeah, the US dollar. I always like to start off on the US dollar index because I am a big believer that you can, not if you're a gold trader and not if you trade the dollar yen, but if you can potentially really simplify your life a lot by spending most of your time analyzing the US dollar index, and then you can apply that information to the six major US dollar pairs. Obviously, they're not going to be all doing the exact same thing. They're doing different versions of the same pattern that you see on the US dollar index. Also, you can kind of do the same thing with the JPY basket. You could spend a lot of time analyzing the JPY basket, and then you could basically trade all seven of the JPY pairs based on what direction you think the JPY basket is potentially going in. So instead of individually spending a lot of time trying to analyze all the yen pairs and all the dollar pairs, you can really simplify your life a lot by spending a lot of time on the dollar index or the DXY if you prefer that one, and the JPY basket. So, anyways, I've been saying for a couple weeks now. Now, there's a reason why I'm calling this a WXYXZ pattern, and to me, it's because if I zoom out a little bit, I do believe that the five-wave pattern ends right here. And to me, it seems very, very clear because we have a trend for the one, correction for the two, and then we have a one, two, three, four, five of three, and then we have a corrective wave four, and then we have a trend for the wave five. So we clearly have a five-wave impulsive move to the downside ending right here. Now, from this point on, which is all the way back at the end of April, we've been making three-wave patterns the whole way through, which is why I'm calling this a WXYXZ pattern, because a WXYXZ pattern should be three waves the whole way through. As you can notice, there's definitely one, two, three waves up here. There's definitely five waves down, three waves up, five waves down. So that's a 5-3-5 pattern. Definitely a 5-3-5 pattern here. Definitely a 5-3-5 pattern there. And now we're in this last little section right here, which if it really is a WXYXZ, probably is going to play out in some sort of three-way pattern, which you can kind of say that maybe the three-way pattern is already happening. So anyways, we had a pretty soft turn to the downside on the dollar index today, on today's daily candle, as you can see. And if this is actually not a WXYXZ, but it's actually like a regular flat, then the 90% is definitely a target for a regular flat. You could say this is one, two, three waves up. You could say this is one, two, three waves down. And now we're in a five-way pattern up for a regular flat. The target for a regular flat is normally the 90% or the 100 or the 105%. So one of these three Fibonacci levels. And obviously, we did turn pretty sharply to the downside at a very, very key level. But for the reason on the 4-hour time frame, I'm really not a believer that this uptrend is over on the dollar index. I think that we're making an expanding flat on the 4-hour time frame because when you see one, two, three waves up at a new high or a new low, like if you see a new high or a new low made with a three-way pattern, then normally you're looking at either an expanding or a running wave B, which means that the first three waves down is an A, the second three waves up is probably a B, and now we're probably in a 1, 2, 3, 4, 5 of wave C. So to me, this definitely does look like a little expanding flat. You draw a couple lines on there if you want to kind of help you see it, but it looks like an expanding flat for sure. If it is an expanding flat, then this is going to go up and make new highs. If this goes up and makes new highs, then you would expect to see the same type of move on all six of the US dollar pairs. So, anyways, yeah, so I am still very bullish overall on the US dollar pairs. I actually think that we could have just made a wave five this afternoon, to be honest with you. I'm already in $1 pair to the long side, but I think this is potentially a one, two, three, four, five. I think this is three ways down here, three ways up right here, and five ways down right here for a three-way pattern, a three-way pattern, and a five-way pattern. So a 3-3-5, which a flat should play out as 3-3-5. To confirm this pattern, we need to see a break of structure to the upside. So in order to see a break of structure to the upside, that's what's going to confirm that this is over, and that's what's going to confirm that we're back into the higher time frame uptrend. Like I said, you can't really confirm it until you get the break of wave 4, and the break of wave 4 is right here. So we can't really say 100%, but to me, it looks pretty clear that that is what's going on. So, anyways, yeah, I'm gonna start taking requests if anybody does have any requests. But first of all, before I do that, I just want to say that the analysis I just gave on the U.S. dollar index should potentially tell you exactly what to do on the euro dollar, the pound dollar, the Aussie dollar, the Kiwi dollar, the dollar CAD, and the dollar Swiss. This one U.S. dollar analysis should tell you what to do on 6 currency pairs. Which, if this turns up, it would be long the dollar. If this doesn't do that, then it could be a more significant turn. I mean, it could be the end of a WXYZ, but as of right now, it's really not looking that way to me. So, anyways, yeah, I'll take a look at gold. I see a couple people requesting gold off the bat. Hopefully, everybody's been watching my gold videos. I am actually not a gold trader. I don't really trade gold at all, mostly because I'm from America, and from America, you cannot trade gold on a margin account. So I spent most of my trading career not trading gold, so I don't really even bother with it. But I do analyze gold twice a day because pretty much everybody besides me trades gold, and most people are big, big gold lovers. But yeah, I'm definitely not a gold trader. Never really have been. Once in a blue moon, I will enter a trade on gold, but definitely not my cup of tea. That's for sure. Anyways, hopefully everybody has been seeing my videos because gold, the reason why gold is so strong is because it's in a third degree wave 3. If anybody is really into the Elliott wave world, you know that the Proctor book, they talk about, first degree, second degree, and third degree trends. Basically, that refers to the trends within trends within trends. So right now we're in a wave 3 on the monthly time frame. So that's your first degree wave 3. You got a wave 3 on the monthly, right? So there's your monthly wave 3. Then you go down to the weekly time frame, you start to get your second degree wave 3 because this is the end of a wave 2 right here. This is a wave 1, this is a wave 2. This is still all one trend. From the bottom way back here, there has not been a break of structure on this time frame. This is all one trend from here to here. So we are in a wave 3 on the monthly. We are also in a second degree wave 3 on the monthly. So now we have a second degree wave 3. By the way, wave 3s are always supposed to be the biggest, strongest wave of a trend. So when you're in a first degree, second degree, third degree, even a fourth degree wave 3, you would better expect a strong trend, and you don't want to be trading against that trend. Now we go down to the daily time frame, and we are in the third degree wave 3. That's why I have 3 wave 3s right here. The monthly wave 3 is one of them, the weekly wave 3 is the second one, and now on the daily we have the third degree wave 3 because we have the end of a crescent right here. This is the end of what I think is a running WXY pattern. 1, 2, 3 waves down, 1, 2, 3 waves up, 1, 2, 3 waves down. That's a 3, 3, 3 crescent WXY. And then we have the first impulsive up, wave 1. The second corrective down is wave 2. And then from that point forward, there has been no break of structure. So we are currently in a third degree wave 3 right now. Like I said, if you're really into the Elliott wave world, you would understand why for probably about a month or more now, I have made videos every single day saying you should be doing nothing but looking for longs on pullbacks. Now going down to the shorter time frames, I'm just keeping in mind what I saw in the higher time frames. And the only thing I'm thinking about is the fact that we're in a third degree wave 3. What does that mean to me? That means any single time I see a move to the downside, I would look at that move to the downside as an opportunity to go long. Any single time I saw a move down, I would say that's likely a pullback within an uptrend. And most of these, in the early wave world, you're supposed to be looking for three-way pullbacks because whether you're looking at an ABC pullback or a WXY pullback, they all pretty much play out in three-way patterns. So 1, 2, 3 waves down, 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 maybe 1, 2, 3 waves down, 1, 2, 3 waves down. Little maybe 15-minute time frame, 1, 2, 3 waves down. Little one right there, 1, 2, 3 waves down. Even right there, there's one, 1, 2, 3 waves down. So If you've been doing nothing but looking for three-way pullbacks for the last month on gold, then you should be pretty damn well off by now. Down to the 15-minute time frame, I would be looking for longs. We got one impulsive down. We have an impulsive down. There is a little bit of a break of structure, most likely a wave A. We have one, two, three waves up, probably a wave B. We are likely in the wave C right now. Most wave Cs do take out the lower wave A, but they definitely don't always take out the lower wave A, especially when you're in a very strong wave 3 like we are on gold. So if I had to guess, I would say it probably is going to go down. It probably is going to take out these lows and then maybe tomorrow continue up. But that's kind of a guess. Really, it could make another higher low like it did here. Higher low, higher low. A, B, C, higher low, just kept on going up. It could literally just make a higher low, and turn up at any point. That's why I would be super, super focused on nothing but logs. Because even down here on the 15-minute time frame, I'm keeping in mind that the monthly is in a wave 3, the weekly is in the second degree wave 3, the daily is in the third degree wave 3. I don't care if you're trading on the 1-minute time frame, you need to keep in mind that you are in a third degree wave 3. And wave 3s are the biggest, strongest waves of a trend. Now, if I go all the way back up to the daily for a minute, this is what I've been saying in my videos. A lot of the times when you have an extended wave 3, it will go, if it goes beyond the 161 and 178, it will likely go to the 261 or 278. So the next big area for me to really pay attention to is this 261.8% Fibonacci extension of wave 1. And that is right around $4,310. That doesn't mean that it's just going to go up there in one candle, or it's going to go up there, without making pullbacks. There probably is going to be pullbacks, and there definitely is a pullback right now. But yeah, definitely an A, B, C, D, E, and now we'll make a wave reach the 5. Yeah, you could be right because it looks like a potential. Maybe, yeah, I don't know. I'd like to say this is a 1-2 right here, but I don't think that's the case. That's just another ABC correction. One thing I like to constantly show people in my group um, is this diagram right here. This diagram right here says a million words if you understand. This right here says pretty much everything you need to know about Elliott Wave. Elliott Wave is basically just a never-ending series of trends within trends within trends within trends within trends. You potentially could, go all the way for the monthly and see a trend within a trend on the daily, within a trend on the 1 hour, within a trend on the 5 minute, within a trend on the 1 minute, within a trend on the 15-minute time frame. So if you really understand the concept of trends within trends within trends within trends, then that's pretty much the only thing you really honestly need to know about Elliott Wave. Because if you know that a trend is not over on the daily, because there's no end of a trend, and you should be able to identify the end of a trend. If you know anything about Elliott Wave, you definitely should be able to identify the end of a trend. So if there's no end of a trend on the higher time frames, then what are you doing on the shorter time frames? You're just looking for pullback entries to the trend that is potentially not over on the daily. Or if you're trading the 1 minute time frame, then you're potentially looking for pullback entries to the trend that is maybe going on the 1 hour time frame. Maybe the 1 hour time frame is your roadmap and you're trading the 1 minute time frame. So if the 1 hour is doing whatever, if it's in an uptrend, then the 1 minute you're looking for entries based on that 1 hour time frame. Let's take a look at Bitcoin. Boy, I heard a lot. I don't trade crypto. I've never traded crypto in my life. I do own a tiny, tiny bit of Bitcoin. And when I say tiny, I do mean very, very tiny, which I've owned for a couple of years. But it's not very much. I definitely don't trade crypto, even though someday I do. I am a big believer that someday pretty much all traders are going to have to transition to a digital currency type thing. At least the forex traders are probably going to have to be trading some version of a cryptocurrency, most likely in the very near future. Europe is potentially going to have their digital currency next year, so there's a pretty good chance that by the end of the decade, we're all going to be trading some sort of a digital currency. Probably going to be the digital euro versus the digital dollar, and the digital pound versus the digital dollar, and stuff like that. But I definitely would say that it looks like we're in an ABC on Bitcoin for sure. And the reason why it sticks out to me that it's an ABC is because it definitely made three waves up right here. Yes, this is definitely a new high. That is the most recent all-time high right there, but it made a new high in three waves. And the move before that was an impulsive five-wave move. So most likely this is an ABC correction. So probably the best thing to do would be to throw your Fibonacci extension on here. Put your Fibonacci extension on the wave A, project it off the top of the wave B, and that would give you your targets, well, at least give you areas to look out for on the wave C. Most likely areas for wave C are normally the 100%, maybe 123 or the 138. Those are probably the most common, but they can extend all the way up to the 161, sometimes the 178 also. If they go any further than that, then they're probably not wave Cs, they're most likely probably wave 3s. But my first areas of interest would definitely be this 100%, 123, and 138. In order to know when this trend is over, you got to be on a time frame where you can see the lower lows, lower highs. That's kind of the key to Elliott wave. Because whenever it breaks, if it breaks that series of lower lows, lower highs at a Fibonacci level that is a key Fibonacci level where you're targeting for a potential wave C, if you can identify the end of a trend for the wave C, you've also identified the end of a correction and the continuation of the uptrend. So I would be watching for a break of structure on around the 4 hour time frame if it was me. My next area of interest would be the 100%, but there's probably a pretty good chance it'll take that out. There's probably a better chance it'll go down to like 104, 105, maybe 105,000. If it goes beyond that, then my next area of interest would be the 102.5, so 102,500. So definitely a lot of good areas to look out for. So yeah, let's see here. If anybody does have any requests, definitely put them in the chat. So be more than happy to look at anything. Um, I've mostly have been following the dollar pairs and the yen pairs lately, but I try to keep up with stuff at least on the daily, weekly, and monthly. To be honest with you, I thought that the Swiss pairs were in a wave five. I mean, they definitely look like a potential wave five, but we got to be careful with the Swiss pairs because they have been in all-time lows since, oh geez, 2023 or so. And just because you're in all-time lows definitely doesn't mean the trend is over. That's for sure. Trying to figure out where you could say that 1, 2, 3, 4, 5. I mean, it's definitely an impulsive move down. It's definitely a trend, but it's really hard to say where the wave 1, 2, 3, 4, 5 is because it's just a series of lower lows, lower highs. Most likely, there's an extension in here someplace, like a first wave extension, probably like a 1, 2 right here, maybe or something. Maybe it's a first wave extension, and now we're in the wave three. So this is the 1 of 3, 2 of 3, and now we're in a 3 of 3. That would probably be my best guess on the weekly. Like I said, I haven't been keeping up with these pairs, but boy, I would definitely be recommending nothing but shorts, that's for sure. Trying to figure out where would be a good place to put your Fibonacci extension. Probably from here to there, because uh, that's the last break of trend. So that would probably definitely be the place to put it. So from here to there to there. And the reason why I would put it there is because this is lower high, lower low, lower high, lower low. There's no break of trend there. This is lower low, lower high, lower low, and then bam, there's a break of trend. So we have an impulsive five wave, a break of trend, and now we're in probably another impulsive five wave. So Fibonacci extension would give you areas of support at least. We're currently sitting at the 78%. Probably a more likely area is the 100%, so I don't really see any reason to say it's over. I would definitely still be looking for shorts, but I definitely wouldn't be trying to go short right now. I mean, it looks like a wave three on the 1 hour time frame. So if I had to guess, I would say on the 1 hour, it's probably going to do a pullback, then maybe go down to the 100%. And then at some point, it's probably going to make a bigger correction like this, a correction that potentially would last a week or so. Hey, Joseph, how's it going, buddy? Nice to see you. How's everything going? So, so unfortunately, there really has been no dollar news over the last week or two because of the U.S. government shutdown, and they have not resolved anything yet. I don't think so. There's likely not going to be any news. Uh, there's no alert about it. Did they work it out finally? TradingView did have an alert I hear saying that the government shutdown was still active. But over the last couple of weeks, there really hasn't been any dollar news. And to be honest with you, I think that where are we looking here? Sorry, I lost my train of thought here. I was looking at the news. There's really no sign that they'll actually work things out yet. We have some really good. Oh, that's right. I think that the New York session, because of the U.S. government shutdown, has been kind of crappy lately, in my opinion. What I've noticed over since the U.S. government shutdown is that especially on the dollar pairs, is they will move in the pre-London and throughout the London session, and then the New York session is like sideways because you have to think that a lot of liquidity definitely comes out of the government, especially the central banks of the government. So there's a lot of liquidity coming in the New York session from the central banks and the Feds and things like that. So in my opinion, the New York session has been kind of terrible lately, which is kind of shitty because that's the main session that I usually was trading. But we got some really good Aussie news this evening. Unemployment rate, that's definitely a pretty good news event. We got GDP tomorrow for the pound. They keep moving non-farm payroll back. They keep moving CPI back for the U.S. Now they have non-farm payroll next Thursday, but if they don't work it out, then there definitely will be no non-farm payroll numbers next week. There won't be any CPI numbers next week either if they don't work things out. As of right now, it says that they are going to release CPI, but most likely they will not. So, anyways, yeah, like I said, if anybody has any requests, put them in the chats. As long as I keep getting requests, I don't really mind staying on. So we did the CAD Swiss. Let's look at the UJ, and then we'll look for Joseph, and then the Euro Dollar. I always consider the US dollar yen more of a yen pair. Yeah, the S&P 500, sure. I always consider the US dollar yen a little bit more of a yen pair than a dollar pair. When I'm analyzing the dollar yen, I actually prefer to kind of compare it to other yen pairs rather than comparing it to other dollar pairs. I was thinking that the yen basket was potentially trying to find a bottom right here. Maybe this wave C was potentially already over on the yen basket, is what I was hoping and thinking, because it actually looks like a very clear pattern. If we're talking about the yen pairs, the first thing I want to do is look at the JPY basket. It's basically the DXY of the yen pairs. So we have three waves down for a potential. First of all, we got a big impulsive up, three waves down for A, one, two, three waves up for B, and then we have one, two, three, four, five waves down for C. And then this channel I have on here, this is the deceleration channel, or the base channel, but it's more the deceleration channel according to Elliott wave terms. And the deceleration channel is supposed to help you identify the end of a pullback if it's more of a traditional ABC. It doesn't really work on flats, but it definitely usually works on traditional ABC corrections. And we are bouncing from the 61%, and we're bouncing from the bottom of the channel, and we got one, two, three, four, five waves down. We potentially have the beginning of a move that should potentially look something like this over the next several months, which would probably look something like that. The problem is that the thing that's going to confirm this is the break of structure to the upside, which we obviously don't have yet, but it definitely looks pretty clear that it could be that. And if we switch back to the US dollar yen, I'm wondering, for a while here, I was saying that this was just going to be a traditional ABC, but what if it's actually not? What if it's more like a WXY? What if this is like a three-way pattern here? This is the A, this is the B. If this pulls back right here, we're going to say, oh, look, it respected the 61% perfectly, even though on the daily it's actually turned right in between two fib levels. And then down for another five-way move to the 100% Fibonacci extension for a wave C. Or maybe even all the way down to the 161, 178 for the wave 3 if it does decide to be a wave 3. But even though we're right in between two fib levels on the daily and the 4 hour, if you look at the weekly, and let's say this weekly candle closes like this, you're going to look at the weekly and you're going to say, look, price respected the 61% perfectly. So it looks like a potential turn. The problem is normally when there's a turn, one thing that my old mentor used to always say to us is when there's the end of a pullback, it should be so friggin' obvious that the pullback is over. It should like literally reach off the screen and smack you in the face. Basically, if it's not obvious, then it's probably not over. And look at some of the like the end of a move on in the past. Look at how impulsive that was. That was very obviously the end of a move. Look how impulsive this was. That was very obviously the end of a move. Look how impulsive that was. That was obviously a turn. Look how impulsive this was. Look how impulsive that was. So normally, if the market is making a real turn, it should be very obvious. It should be like very impulsive, and you should be looking at that saying, "Oh, that is a turn for sure." My old mentor used to say, if you're sitting here scratching your head saying, "Man, I wonder if this is really a turn," then 9 times out of 10, it's probably not a turn because it should be very obvious that it's turning. So that's the problem I'm having with the yen pairs because the euro yen is the same thing. We are sitting on the euro yen, we're sitting at the 105 area, and if this really is a wave B, the 105 is a great target for a wave B and a great place for this to turn down for potentially 3 months for a big old giant wave C, which would be, I think, I in my Zoom meeting the other day, I figured out that this is about 2,500 pips down if it really was the end of a wave B. But we're having the same problem. It's really not impulsive. Look at like these big turns in the market are very impulsive. It should be so obvious that it's over. When you have the end of a big giant wave like this that lasted months, when it finally does turn, it should be very obvious. And then the pound yen is another example. We are right at the 90% Fibonacci retracement of this move down. If this is a regular flat and this is a wave B of a regular flat, then 90% is a perfect target for a wave B. And that potentially would be the beginning of like a 6 month, at least 3 to 6 month move to the downside for a wave C. It's just not impulsive, is it? And on the U.S. dollar yen, my another one of my problems is I actually think that the dollar yen, I actually think the dollar is going to go up a little more. I'm really not convinced it's over. I think it's more likely going to turn into. I think it's more likely going to go up and take out these highs. I still think that the dollar is going to go up more, mostly because of my weekly time frame analysis. Which actually the DXY is a little bit better for my weekly time frame analysis. Which is I think we're in a WXY. I think we're in a three-way pattern down. I think this is an A. I think this is going to at least go up and take out this high for a wave B, putting us all the way up to like 102 maybe, and then probably down to the 78%, right around 95 for a wave C, and then we're probably going to continue up because I still think that someday the dollar is going to go up and take out this high right here, all the way up to like 125, maybe even 127. But that's probably like a 5 year outlook or something like that. Maybe not 5 year, but probably like a 3 year outlook. Probably about the time that Trump leaves office is probably about the time that will happen. So, anyways, U.S. dollar yen. The only thing we know on the dollar yen right now, unfortunately, is that the last wave is over. I really like. I really like to be a realist in the market. I like to say to myself, what do I actually know about the market right now? The only thing I know about this market right now is that this wave from here to here is over. On the very high time frames, I have an idea that maybe this could be a top right here. But do I know that that's a top? Absolutely not. The only thing that's going to tell me that that's a top is a break of the structure right here, which obviously you don't want to wait 500 pips for it to go down and break structure, do you? So there's only two things that can happen. It's either going to make a pullback to this move up, some sort of an Elliott wave corrective pattern to a Fibonacci level, and then break to the upside, or it's going to make lower highs, lower highs, lower highs, lower highs, and continue to make lower highs, and eventually go down and break this structure. So if we're looking for shorts and it just keeps on making lower lows, lower highs, that's fine. If we're looking for shorts and it does some sort of a recognizable Elliott wave pattern, goes to a Fibonacci level, breaks structure to the upside, then we'll stop looking for shorts and start looking for longs again because we should be able to tell the difference between impulsive and corrective. If this turns into a corrective move, then it's going to continue up. If it's an impulsive move, it should make lower lows, lower highs. It should be damn obvious that it's going down. So we're just going to have to see what it is. As of right now, it's looking impulsive. Right now, it's lower high. It's lower high. It's pretty impulsive on this time frame, at least. Yeah. For a while, I was keeping up with the stock market, but I kind of stopped because I don't trade that either. But I do keep up at least on the higher time frames. I thought we were in a fifth wave extension like a month ago, and it just kept on going and going and going and going. So I kind of lost my count on it, honestly. Let's see, is that the one that's next? Let's see, I think it is UJ. Yeah, we'll look at the euro dollar after the S&P 500. I thought we were in a fifth wave extension, like way the heck back here someplace, like way back here, and it just kept on going and going and going. It did turn at the 261.8, which makes me think that maybe this is all just a wave three, right? But that's not even, where's that Fibonacci level I got on there? That's probably not the best fib right there. Okay, that is the wave fib because there's your wave one. No, okay, let's set this up a little better. Put this here because I do think that this is a 1-2. Now, see, so we're not even to the 261.8 if you do that. We're at the 238 right now. So we have no break of trend on the daily, do we? We have a wave one, we have a wave two, and then we have no break of trend. So this from this point forward, it's all one trend. There's no break of trend, no break of trend, no break of trend, no break of trend. Right here, it definitely does look like it broke trend, doesn't it? So we might have had our first break of trend since way down here. So maybe we are in a way, maybe we're starting a wave four. That kind of makes sense, doesn't it? Especially with this government shutdown bullcrap that's going on. And then potentially go up to the 261.8 for a wave five once that's complete. And then maybe we'll get like a way bigger pullback, like a big pullback. But I would say we're probably in a wave four because of the fact that this is the first break of trend we've had since this whole move started. So on the 4 hour time frame, I would definitely be fibbing this out like that. Oh man, it looks like it wants to turn right now. Hmm. It does look like it's trying to turn, doesn't it? Looks like three waves up and an impulsive down. What's going on with the euro dollar? Because I am in the euro dollar. I'm short the euro dollar. Let's see. If the stock market goes down, then the dollar might have some more momentum to push up too. They are definitely inversely correlated to a small extent. They definitely are not like 100% correlated, but they are definitely somewhat correlated. Hmm. I don't really like that that's three waves up right there, but maybe it's supposed to be like a WXY or something, not an ABC. Definitely turned it to 78% very hard, didn't it? We might be making another impulsive move the same size as this now over the next couple of days. It does look pretty bearish, doesn't it? Does the Nasdaq agree? Nasdaq is a little bit different, but still the same type of pattern. See, this way back here is where I thought the fifth wave extension was, and then it just kept on making higher highs, higher lows. Yeah, I don't know if it's a wave five. I would say it's the end of a wave three, but I think we're starting a wave four, if I had to guess. What's a wave four will probably look similar to this wave two back here, which that wave two lasted quite a while. I'm on the 16-hour time frame. That's a weird time frame. It lasted 1, 2, 3, 4, 5, 6, 7, about 8 trading days, so like 2 weeks. We're on wait 1, 2, 3, 4, so we're potentially about halfway through maybe a pullback. I bet we're gonna get another wave down and then probably another push up. I think this is potentially a 3, 4, 5 right here. But yeah, you could potentially throw a base channel on the 4 hour time frame probably. Yeah. I'm not really much of a channel guy. I've never been a big fan of channels because I always like things to like work really well, and like I always put my channel right on the spike, and then I'm like, okay, I want it to work really well all the way through. But with channels, you have to be a little flexible with where you put where you start your channel and where you, whether or not, it's perfectly hitting all these spots or not. That's the only reason why I've never been a big fan of channels, because you have to be really flexible. You have to be okay with them not working perfectly, not being perfect spikes and stuff like that. I would definitely keep an eye out for sorts, definitely. To be honest with you, the euro dollar, I thought was going to go down again. I'm really not convinced that the dollar's over. On the daily time frame, it does look a little convincing. I will give you that. But the reason why I'm not convinced is because I see a pattern that I think is very clear. And when you see something that you think is very clear, you need to hold on to that clarity. And the euro dollar and the pound dollar to me seem very, very, very clear on the daily time frame that they're one, two, three ways down, one, two, three ways up, and now we should be either at a running flat looking like that, which I would probably target like the 100% for that, or we're in an expanding flat, which would put us all the way down here. Mm. I think the dollar is going to keep going up. I'm really not convinced that the dollar move is over because of the high time frames, like the weekly time frame. I think that the dollar is going to go up probably until next year, probably January or something. We'll get another big push down on the DXY. So to me, the euro dollar looks like an ABC to me on the 1 hour to 4 hour time frame. This looks like one, two, three ways down. That's why I took the short already. I got a little bit of a. I like to use bigger stop losses. I don't like to put my stop right there. Sometimes I will even scale into a trade a little bit, but it looks like a potential ABC correction. It looked like it was already over today. It broke structure, but then it went up. That must have, be a wave four, hopefully. Three, four, five. The thing that's going to confirm this is the break of structure to the downside, which we obviously don't have yet. But the pound dollar to me also agrees with that scenario. Well, the pound dollar made a pretty impulsive up though, didn't it? I could be wrong about this. I definitely could keep going up, but this really looks like one, two, three ways down. This really looks like it could potentially turn back down, break structure, and turn into a downtrend again. The pound dollar is actually one of the ones that I thought was so clear that it was just like pretty much had to happen. But that is a little bit of a limiting belief to think that, because obviously the big traders, they know all of our strategies. They know Elliott wave. They know structure analysis. They know ICT crap and all that type of stuff. So sometimes you're gonna see a pattern that looks so perfect. It's gonna look like amazingly good, and then it's gonna fail because, like I said, big money traders know of everybody's strategies, and sometimes I think they set up patterns purposely just to trap people. But the pound dollar and the euro dollar to me do look like they want to turn down. The Aussie dollar to me potentially could be an ABC, but I was actually thinking that this could. I was thinking this was going to go down and take out the low, to be honest with you, but it definitely could be an ABC. It definitely is trying to respect the 78%. So if it holds engulfing up, that probably would be confirmation of a push up. But it just really isn't convincing to me that this is a real turn because it's not impulsive like it should be if it was a real turn. Like this was the end of a ABC right there, and look at that candle. It took out 2 or 3 days worth of price action in all in one day. It took out that candle, and then it went up to the high of that candle all within one day. This is definitely not very impulsive. Like I said, I think overall on the very high time phase, I totally agree with you. I am extremely bullish on the higher time frame still. I still think that the euro dollar unfortunately could go all the way up to 1.34, but I'm just really not convinced that this correction is over. But like I said, if it holds above here at the end of the day, then I'm probably going to change my analysis tomorrow and become bullish. If it doesn't hold above there, then I'll probably stay bearish. Just because I really feel like it needs to either go here or here. If it's a running flat, I would target this. If it's an expanding flat, I would target that. And then the pound dollar to me looked extremely clear that it was a regular flat. But it definitely does look like it's trying to turn, doesn't it, on the daily? It's going to be interesting to see how this daily candle closes, whether it closes up or not. But I was thinking that this was going to go to the 105 or 100 because this right here was a perfect 90% turn. So I was thinking that we had a little bit more down. I was thinking we were going to go down to at least the 38% before we turn back up. But like I said, I am definitely bullish on the pound dollar and the euro dollar on the very high time frames. I still think the pound dollar might go up to 1.5, the euro dollar to 1.34. I kind of hope I'm wrong about that analysis, to be honest with you, because I live in Europe and I get paid in dollars. My rental properties are in America, so I get paid in dollars for my rental properties, my two rentals, and my business is incorporated in America too, so I get paid in dollars for that also. So I get paid in dollars, but I spend euros because I live in Europe. So I kind of hope I'm wrong. I kind of hope that the euro dollar just turns into a big old giant uptrend to tell you the downtrend. I kind of hope, to be honest with you, I kind of hope this is an ABC correction on the monthly, and I hope the euro dollar goes all the way back down to parity. If it does, I'm going to be transferring like a big chunk of cash back to Europe. And pound dollar, same thing. It looks to me like an ABC correction. It could go all the way back down. Even the pound dollar could potentially go down to parity, honestly, but I don't really see that either. Based on just fundamentals, I don't really see that's going to happen either. I think the DXY is going to go down, the dollar is going to go down. But I honestly do think that the DXY is going to go up before it goes down. I'm really not convinced that it's going down now. I think it's going to go up and at least take out that high. I think there's a good chance it might even take out this high. I think that it might go to 102 and then turn down to 95. And then I think it potentially is going to turn up. But this is, like I said, this is potentially something that could take 2 years to play out. So maybe towards the end of Donald Trump's term, we're going to get a bullish dollar again or something like that. It could be 2 or 3 years down the road. Honestly, the DXY to me is even more convincing that it's an ABC correction than the dollar index. Especially with this lower high rate here, it really looks like an ABC, and it really looks like a 1, 2, 3, 4, 5. Looks like it needs to go up, break structure, and continue the uptrend. But like I said, I think this is a temporary uptrend. I think it's gonna, maybe go into November or December, maybe into January, and then probably turn back into a downtrend. Like I said, I do think my target for the DXY is 95 also, because that's the 78% fib. And we're right in between two fibs right now, so I also am targeting the 95 area for the DXY. I just think that they're not going to make it that easy for us. They're going to trap. They're going to make a break a structure, and everybody's going to become bullish the dollar. And it might even break this structure, and everybody's really going to be bullish the dollar if that happens. And then it'll probably drop down to 95 once everybody is really bullish the dollar. The market, a guy I used to trade with, used to always call it the auction theory. They like to go up and get people excited. They like to, a lot of traders are trading breakouts. So they see this, they're going to be like, oh, the dollar's going up, and then maybe it does go up more. Maybe it goes up and takes out that higher, and then next thing you know, everybody's going to be so bullish, and then bam, it goes right back down. They just got to go up there and grab some liquidity sometimes. But man, I think that the dollar pairs have been a little screwy over the last week and a half just because of this stupid government shutdown. I was kind of hoping that they would work things out pretty quickly, but I'm pretty sure that the last the last shutdown that was during Trump's administration was last time he was in office was 32 days, I think. It was about a month. So unfortunately, this could go on for quite a while. Unfortunately, if anybody hasn't done so yet, definitely do check out my website. I do offer a membership. If anybody's interested in that, it comes with a trading course, and I do sell all my trades. I'm gonna try to get back into the real swing trading. What I'm gonna do is, day trade the euro dollar and maybe the pound dollar, and then try to swing trade everything else. Because swing trading has always been what I've done. I literally spent 10 years swing trading. I grew my personal trading account to over $100,000 trading the 4 hour time frame and up, from originally like $1,200. The problem is when you have a full time job, it's very easy to be a swing trader because you don't have the time to sit there and look at your charts. So if you have a family and a full time job and you don't have time to be on your charts, you really should be a swing trader. And in my opinion, swing trading is very simple because you literally get in a trade and hold on to it for a couple of weeks and then get out. It's pretty simple. And if you have a full time job and a family and things like that and don't have time to be on your charts all the time, swing trading is the way you should go, definitely. But it's not easy. If you're the type of person who does spend a lot of time on your charts, and unfortunately, ever since I started this YouTube channel a couple of years ago, I am on my charts a lot. And when I'm looking at the 1 hour time frame, what it does is it causes me to get out of a trade that potentially is still good on the 4 hour time frame. Because on the 1 hour time frame, it'll look like the trade's no good anymore, but really the trade is actually still good. If you're going to be a swing trader, my first recommendation is to remove all sort of time frames from your chart. Don't even look at them. I literally spent probably almost 10 years without even looking at anything below the 4 hour time frame. And like I said, I was able to turn my small personal trading account into $100,000. But looking at the sort of time frames is going to do nothing but cause you to get out of good trades or get into bad trades. Now, if you're a day trader or a scalper, then obviously you want to look at the sort of time frames. That's not what I'm saying. And I have known a lot of really successful scalpers and really successful day traders. But for me personally, swing trading is definitely the way to go because in about a month I'm going to be traveling back to the States to see family for the holidays. Definitely not going to have time to keep up with the 1 hour charts when I'm back in the States. And then next summer, I'm building a third rental property in America. I'm building a log cabin in America on my property that I inherited from my mother. So I'm going to be going back and forth from America to Europe probably 3 or 4 times that year. So I'm not going to be watching the 1 hour time frame. I'm going to be watching the 4 hour time frame and the daily time frame and the weekly time frame. But like I said, I am a big believer that a lot of people are trying to be a scalper and trying to be a day trader when they have no business doing so. If you have a full time job and you're not available to watch the sort of time frames, then why are you watching the sort of time frames? Why are you trying to take trades on the 1 hour and the 15-minute time frame if you don't have time to watch the 1 hour and 15-minute time frame? If you don't have time to watch these sort of time frames, then these sort of time frames should not even exist to you. You need to remove them from your chart. They shouldn't even exist. You don't even look at them. Right now, I have a bunch of sort of time frames on my chart just because I was looking at some scalping stuff with people in the group the other day. But to be honest with you, I don't even like looking at anything below the 1 hour time frame. I literally spent years with my charts looking like this, basically. I would have the 1 hour time frame, but just so that way I could go down and look at structure. But I had no shorter time frames on my charts for years. Never, they didn't even exist. Never even looked at them. If you'll be surprised how well you do when you remove some of those sort of time frames sometimes. How much easier life can be because you're not going to be seeing all the volatility, liquidity, bullcrap grabs that the market does every single day. You're not going to get trapped on all these stupid trades that aren't even good trades on the higher time frames. But anyways, does anybody have any more requests? Always happy to look at stuff. I've been debating for a while whether I should start trading these indices a little more because they are pretty damn nice. I've known some people that have done really well with them. Like I was saying in my group the other day, I think that one of the best things to do if you do want to day trade is during the London Open, trade the DAX and the UK 100. You'll be surprised how often a really nice move starts right at the beginning of the London session on the UK 100 and the DAX. Like right at 8, 9 o'clock in the morning, London time, very often a really nice move starts. And then the same thing applies with the Nasdaq and the S&P 500. You'll be surprised how often well, I'm talking about London time because I live in Europe, but I'm in the same time zone as London. You'll be surprised how often at 2:30 in the afternoon, New York session, when the stock market opens, how often a brand new move starts. Like right here, this was the beginning of the session right there. Bam! Look at that nice big move. So I think one of the best things to do if you want to trade these is during the New York Open, look for trades on the S&P and the Nasdaq. During the London Open, look for trades on the UK 100 and the DAX. Definitely the way to go. And if you are available during the Asian session, maybe you could try trading the Aussie 200 and the JPY 225 during the Asian and Australia Open market because they do make some nice moves. Sometimes I'll be trading something like the euro dollar and I'll be like, oh man, the euro dollar has one of those days where it just does like nothing all day long but goes sideways. You're like, oh, that's crappy. And then you look at the S&P 500 and it made like a 400 pip move. I'm like, oh, geez, that's nice. So most brokers do allow you to trade pretty much anything too. So unfortunately, if you have a U.S. broker, you are kind of limited on what you can trade, which is why that is why I was never a gold trader, and why I'm still not a gold trader is because I'm from America. I only have been living in Europe for a couple of years now. So before I moved to Europe, I was not able to trade gold. You cannot trade gold in America on a margin account. You can only trade it on a one-to-one or a futures account or something like that. You cannot trade it on a margins account. You cannot trade any metals or anything like that on a margin account in America, which is why I never trade gold, and I still don't trade gold because I'm a creature of habit. And I spent 10 years not trading gold, so the way I look at it is why trade now when I spent 10 years not trading it? So it's just like people absolutely love gold. I'm actually kind of on the opposite side. I kind of hate gold. I don't know why, but I've never been a big fan of gold. I think it's just shitty pair. It doesn't correlate with the dollar, and it kind of does whatever the hell it wants to do. But my old mentor was a big gold trader also, and he used to look at all gold pairs as a group. Every single day, he would start off his day by looking at gold versus the dollar, gold versus the euro, gold versus the CAD, gold versus the pound, gold versus the Aussie, gold versus the Kiwi, gold versus the Swiss, gold versus the yen. And then he would go down to like the 1 hour time frame and look at all the pairs on the 1 hour time frame. And by the time you do all that, you have a pretty good idea of what gold is doing because of correlated pairs. You look at all the gold correlation and say, what are they all doing that is the same? What are they all? What's the same? What's different? And by the time you're done, you usually can have a really good idea of what gold is potentially doing, or what it could do, or what it's going to do. By the time you're done. So definitely, if you are a big gold trader, I really, even though you can't trade most of these, some brokers do allow you to trade gold versus euro, but I don't think I know any brokers that allow you to trade the other ones. But if you are a big gold trader, I really highly suggest looking at all gold pairs every single day before you even start your day. Start your day off by looking at all gold pairs and say, what are they doing that's the same? What are they doing that's different? You can trade gold in America, just not on a margin account. You can trade gold futures. You can trade gold, on like an E-Trade account or something like that with one-to-one leverage. You just can't trade gold with leverage on a U.S. broker account. Google it. It's definitely the truth. A lot of people in America will open accounts overseas, but even that's getting more difficult now because some of those accounts that allow U.S. clients are a little on the sketchy side on whether or not you get your money back. But there's a lot of liquidity in the New York session. I'm not saying that. You can trade gold in America, you just can't trade it with leverage. You can't trade it on a margin account. A lot of people are trading gold on non-margin accounts in America, or they're trading with a futures account, or they're contract traders. They're trading gold contracts or something like that. There's a lot of different ways to trade gold other than margin accounts. So, anyways, let's see. I don't know. I'm still kind of hoping the dollar turns up one more time, but we'll see. The thing that's going to confirm the turn up is a breaker starts it to the upside. If it doesn't break starts it, it just keeps on drifting down, and then we probably really do have a turn to the downside on the daily. If today's daily candle close is really bearish, then probably starting tomorrow I will start looking for shorts on the dollar at pullbacks. But as of right now, to me, it still looks like a potential flat. It still looks like a potential flat for sure. It looks like a possible ABC correction. 1, 2, 3 ways down, 1, 2, 3 ways up, and 1, 2, 3, 4, 5 ways down. Apparently, drawing lines on the top and bottom of flats is patented, so I gotta be careful with that. But even though it's in all the Elliott wave books. So, anyways, I try to do these live streams every Wednesday because every Wednesday. So definitely make sure you like and subscribe. Make sure you follow, hit that notification bell so you don't miss out on future live streams. The point of these live streams is to take requests from the audience, so that way I can kind of interact with people, answer questions for people, and stuff like that. So definitely make sure you come for that. Oh, I did forget the pound yen. Let me look at that for you. So definitely make sure you like and subscribe if you haven't done so already. If you haven't done so already, definitely do check out my website. It is only $30 a month. I keep it extremely cheap because I am not looking to get rich from my membership. I'm just looking to get rich from my trading, just like all other traders are. So definitely check out my membership if you're interested. Comes with a trading course, which is 34 videos, which I can't. Oh no, I can. And it also comes with a ton of educational information. And I do share all the trades I take with the group at the time of entry, but most of the trades I take are day trades or swing trades, and I don't enter 4, 5, 6 trades a day. I enter maybe 4, 5 trades a week. So on the pound yen, like I was saying, we could possibly have the top of a wave B. We are right at the 90%. I am definitely looking at this as a WXY. It looks like it could be a complete pattern. If it is a complete pattern, it definitely would turn into a downtrend, which would likely last probably 3 to 6 months. And it would probably go down and take out both of these lows. And it would probably equal about 2,500 pips if that is true. Unfortunately, there's really no proof of that being true yet. And it's really not that impulsive, so I'm kind of skeptical. The only thing I really know 100% right now is that the wave from here to here is over. This move down potentially could still be a pullback to this wave. Now, yes, there is a gap on the pound yen, and I think a lot of retail traders are probably trying to sort this to the gap, and it might, and I'm not saying that it won't, it might continue down. I definitely would be recommending shorts for anybody trading, the 1 hour time frame and below, definitely. And if this continues to make lower lows, lower highs on roughly the 4 hour time frame, lower high, lower high, lower high, if it makes another lower high, then goes down, makes another lower high, then just keeps on doing that, then this probably is the top of a wave B on the weekly time frame, and it probably is going to turn into a 3 month downtrend with lots of pullbacks along the way. If it starts to, break up and then turn into like a very overlapping pattern and do something like this, then we know that this is an ABC correction or a WXY or something like that to the move up, and potentially it's going to continue the higher time frame uptrend. So the only thing I know right now for sure is that the wave from here to here is over. I would be recommending shorts because there's no breaker structure up. Probably what I would do is go down to like the 1 hour time frame or below, and I would put my Fibonacci retracement from here to here, and I would look to see if this move up makes a Fibonacci bounce. And if it does make a Fibonacci bounce, I would definitely take it as a short. And if it just keeps on making lower lows, lower highs, then I would just keep on going short at the end of every pullback I see and getting out at the end of every impulsive move I see. Hey, Pirate, how's it going? So anyways, I like to keep these live streams around an hour because I do make about 10 or 12 videos a day, even though they are short videos. But I do these live streams every Wednesday, so make sure you like and subscribe. Come back, next Wednesday, and you'll see a brand new live stream. And as long as I keep on getting requests, I always stay on for the full hour. So definitely make sure you check out my like and subscribe. Check out my website, and as always, thank you for coming.